Hello and welcome to this special presentation. Now is the time to prepare for the next secular bull market advance. I'm Tom Bowley, Chief Market Strategist with EarningsBeats.com, and it's a pleasure to be with you for this special presentation. I do want to mention that it is currently Monday, April 21st, 2025, and this will be airing later in the week. So as a result, you might be looking at some numbers that are different than what I'm showing on the charts. I just want to make you aware of the timing difference. Today, what I want to do is I'm not necessarily suggesting that the market is ready just to explode back up in the next secular bull market phase. However, this is a good time to be preparing for it, getting ready. We don't know exactly when the market turns, when we actually start to show more bullish signs, but we do need to prep and be ready for it. Not too many folks knew exactly where the bottom was going to be back in 2022. During that cyclical bear market, same goes with the pandemic in 2020, the trade war bear market that we saw at the fourth quarter or in the fourth quarter of 2018, and so forth and so on. So this is just a time to prepare for that next bullish phase. So what I want to do today is I just want to walk you through kind of a behind the scenes what I do and what I'm currently trying to prep for, and then show you how I trade as we start to make moves back to the upside. So I'm going to start off today first with the S&P 500 chart, because right now we're definitely not in a bullish phase. We are continuing to downtrend. You can see that the S&P 500 has been putting in lower lows, lower highs, lower lows. That's been the series. So far, you can call it an ABC type of bear market. We'll see whether or not that C holds, whether that low holds. That's down at 48.35. And currently, I think we're just trading in this trading range. But at some point, when the market does start to turn back up, we need to be ready. We need to look for some of the signs, technically, that things are beginning to change back in more bullish fashion. So the first couple of things I would be looking for on the S&P 500 is, number one, we want to get back above that 20-day moving average. You can see that's been a really big, difficult resistance area for the market so far since the top in February of 2025. The other thing that we want to pay attention to is price resistance. So we've got the moving average resistance, but then we also need to clear price. Sometimes during bear markets, you get through the 20-day, but you never make it through price resistance, and then you turn back lower and below the 20-day moving average. So 20-day moving average is step number one, but step number two is going to be getting back through 55.21 on the S&P 500 and being able to close there and sustain that move back to the upside. So that's what I'm looking for from the overall market, at least in terms of the benchmark S&P 500. Now, one of the things that I've said to our members, and I say, in a lot of these shows over and over and over again, is that I get really nervous when the volatility index spikes and gets above 20. You never quite know when it does that, whether we're going to come to a quick little short-term bottom or if it's going to evolve into a much deeper period of selling. But when the VIX goes through 20, the selling tends to escalate quite a bit. So if the VIX keeps going up, it's not the same market. We start seeing very impulsive selling, indiscriminate selling. Everything gets hit. Well, for the most part, everything gets hit, and things tend to get hit pretty hard. So you can see back in toward the end of February, that's when we made this move up and went through 20 on the VIX. And some would say, well, why would you wait until 20? Well, if you don't have other signs that suggest that we're topping, that this would be one of those that potentially would suggest that. So as we pulled back at the beginning of February, you can see we were still straddling 5,900 area, trading just a little bit below 6,000 when the VIX went through 20. Now here we are, VIX much, much higher. And let me get an update here. Here is the updated VIX right now, 3560. And we're talking about the S&P 500 now, no longer near 5,900. We're down to 5,100. So a lot of damage has been done since that VIX went up through 20. So you have to be mindful of that. Bear markets historically do not end until the environment for downward price action ends or is over. And so what I'm looking for in terms of the VIX is a move back down below 16. Well, you can see we're up at 35 and change right now. We're not even close to being able to call the end of this bear market in terms of this particular sentiment indicator and the price action that we're seeing. Now, I see some other things that I've talked about that look to me like we're in a bottoming phase, but we have to still respect the price charts. That's always my number one primary indicator, by the way. So one thing to look for as we start to strengthen some of the key areas of the market, some of the key sectors, industry groups, we want to make sure they start to show relative strength and positive relative momentum. So I'm talking about relative to the S&P 500. So here you've got technology versus the S&P 500. I think it's pretty clear to see that this relative relationship was strengthening all the way until about the middle part of 2024. That's when you want to be considering trading technology stocks. When they're leading the S&P 500, you get pullbacks, test 20-day moving averages, great time to get in. But once you start to roll over, and there are two things that I watch. Number one, is that relative strength line below a declining 20-day, or excuse me, a 20-week EMA? It's a relative EMA. And in this case, that's exactly what we're doing. And that's what we've been doing throughout 2025. And the other thing that I watch is to see if the relative PPO is below zero. Anytime relative PPO is below zero, that's an indication of negative momentum or bearish momentum. If you're above the zero line, that's more indicative of bullish momentum. So when you've got a relative strength line or a relative strength chart that has a PPO below zero, it's telling you that you've got bearish momentum in play. And then top that off with this bearish configuration, bearish relative configuration. And, it's never a good idea to try to be a hero when you've got a group like technology falling the way that it's falling right now. So again, in order to feel like we've got a better market, we're going to need to see some strength out of technology group. We're going to have to see this relative chart, technology versus the S&P 500, turn back to the upside. Semiconductors. Now, this is a very, very important component within technology. Looking at the same relative chart, though, here you can see, look at semiconductors and how they were trading above that 20-week EMA, relative EMA. This is semiconductors relative to the S&P 500. Notice that PPO, clearly bullish, well above the zero line. Well, take a look at the changes that have been taking place in 2025. We've seen it go back down below the 20-week EMA, that relative EMA. That's actually crossed below the 50. So we've got a bearish configuration here. And you've got the relative price oscillator, the percentage price oscillator going down below zero. So you've got negative momentum and clearly a negative relative trend. Not really what you want to see. So we need to see these types of charts turn. I could pull up software and you're going to see relative weakness. Look at that relative PPO, negative. How about going into communication services and the internet area? Another key area that drives bull markets. Not exactly driving anything right now. You can see a pretty steep drop. We topped on a relative basis back in January. We've gone down. Now we're trading below the 20 and the 50. And look at that relative PPO down below zero. So these are three key areas: semiconductors, software, internet. These are growth areas that tend to carry the market during bullish phases that during this bearish phase, obviously not doing well. They need to recover. So that's going to be something to kind of keep an eye on. Now I'm going to show you some individual techniques and strategies that I use in just a minute. But I do want to just point out, for those of you that are interested in Earnings Beats and what we do, go to earningsbeats.com. You can scroll down. We have a free newsletter, Earnings Beats Digest. We have tens of thousands of folks that have subscribed to it. It is completely free. There's no credit card required. We don't sell your email address and so forth. So name and email address is all it takes. And twice a week, I'll give you some things to think about in terms of, we call it a newsletter. It's really just a chart in 2 paragraphs. So it's a very, very quick read, but it'll keep you on top of some things about the overall market and may throw some individual stocks out there from time to time that you might want to trade. Of course, that's your responsibility. But check that out. We've got the free newsletter available to anyone who would like to learn a little bit more about the way we approach the market. Now, getting back to some individual kind of strategies. First of all, when I think we're bottoming, or I think we're in a bottoming process, what I typically do is I start to take, I kind of like dip my toes in the water in terms of risk. So I like to start with the ETFs that track the major indices. So I'm not really that interested in trying to, jump into individual stocks because if I'm wrong, those individual stocks are probably going to carry a lot more risk than the ETFs tracking the major indices. So when I do call bottoms or bottoming processes and I want to start getting back into the market, I like to use ETFs. But once things start to turn, one of the strategies we will do is we'll use some of the scans at StockCharts, and their scan engines. Absolutely, it's wonderful. It's very powerful. And so not only can we run a scan against all the stocks out there in the universe, but we can run scans against our watch lists or our chart lists that we keep at StockCharts, which is pretty cool. So anyhow, here is the scan. This is on our website at EarningsBeats for our members. Any member who also happens to be a member at StockCharts, Extra or Pro, can click on these links and it literally will take you right into the StockCharts account. You have to make sure your StockCharts account is open. But if you click on this while your StockCharts account is open, you'll see it load just like this did right here. So that right there is exactly what I just showed you over at EarningsBeats. Here is that the criteria or the syntax. You just type it right in here. And then I added a couple things. I added number one, I want to make sure that the 20-day EMA is above the 50-day. And the reason I do that, I want to make sure I have an uptrending stock. I don't want a downtrending stock where the 20-day is below the 50 and we've come up and then we're just coming back down to test the 20. Because again, if we continue to go lower in this current bear market, cyclical bear market, it's very possible that that trade gets away from us to the downside. So I want to get a healthy momentum, stocks with bullish momentum. So in that case, you want a 20-day that's above the 50-day. So that's what this line right here is doing. It's just making sure that we have a bullish configuration on the chart, 20 days above the 50. And then just to make sure that we're not into, a lot of the foreign stocks, because what we do is we specialize in US stocks. So we just make sure we put in the exchanges, either New York Stock Exchange or NASDAQ. And then we run this scan. And when I ran it today, what I got was 28 matches. Now, this is just against the universe of stocks out there. And some of these you can see are very low volume stocks. I'd want to get rid of those, and I could add criteria to the scan to do that. Or if I save this to a chart list, I would just want to make sure I get rid of a lot of these stocks that don't have much volume. But I can then, in this list, I can sort them by scooter rank, which is StockCharts technical rank. I'm not going to get into the details. The formula is at the website. You can check that out. But it's a relative strength indicator. The higher the number, the stronger the stock has been over the last 5 months or so. So you can take a look at this. And I wanted to bring up this SSR mining because it's a gold mining stock. Now, if you take a look at here on the industry groups, now I could go in, I showed you some that were very weak, but if I go down to materials and I pull up gold mining, take a look how strong gold mining is right now. So this is an area I'm generally not a fan of, but in this current market environment, gold stocks are doing really well. So here's an area that's definitely strengthening. If you're looking for bullish momentum, these are the kinds of stocks that you want to look for. And so that just kind of leads me back to the this SSR mining because it came up on the list. I wanted to pull it up, just show you what's going on the chart. You can see we're definitely in an uptrend. We had a failed breakout or maybe a double top. But look, we're coming back down to the moving averages. So down today, the stock's down 3.7%. And potentially this could be a cup with a handle. So a breakout above about 1130, 1140 potentially would measure up another, maybe $2.80 to maybe close to $14. So that's just one quick way to get in. You can take a look at the industry groups, see the areas that are leading the market, run your scans, find stocks that are within those industry groups, and there you go. Now within here, I also keep what I call chart lists. And so here's my strong earnings chart list, the latest strong earnings chart list. If I pull this up in edit view, you can see that I have 401 stocks in this chart list right now. So it's a watch list. And what it is, it's a watch list for stocks that have strong fundamentals in the most recent quarter, beating both revenue and earnings estimates, but also have strong technicals. I like to, vet these stocks, look at their charts as well before I add them in. So I've got 401 stocks that right now I feel like, at least on a relative basis, showing some strength, also showing strong fundamentals. And when I see an area that I like, let's say gold mining, you can go right into here, this search table, and type in, actually, let me go back to the summary. Let's do the chart list in summary form, because now I've got the sector and the industry group. But I can just type in gold. And here are two stocks that are on my strong earnings chart list, AEM and FNV. So I could maybe take a look at AEM, and you can see this one's pretty overbought, probably needs a little bit of a pullback. Go back and we'll pull up, type that back in again, pull up FNV. This one, same thing. It's kind of a little overbought, probably looks like maybe topping with this big black candle, which can be a reversing candle. But we might be able to get the stock back down closer to that 20-day moving average. And then, of course, it would show up on the scan that I ran. So a couple things here at StockCharts. Number one, scans, really important. That's part of their paid service. You need to be part of the paid service for the scanning capability. The chart list, to be able to save your charts into a chart list, or kind of a watch list. It saves your work. So if you find stocks that you like or you've run scans, you can dump that data, the scan results, right into a chart list, and you can continue to monitor that. One last thing I want to talk about on the scans is you can go, or on the trading, and when we start to get a more bullish environment, or if you just happen to find a bullish environment within a cyclical bear market decline, that's fine too. But you want to be aware of the price alert feature at StockCharts. So if you go to the dashboard, you'll see alerts over here. If you click on it, it'll take you down here. I have a couple of alerts that I set up just to show you as an example. And I said, let me know when Apple crosses below 170. And then you can either put in as a notification, you can put email, text message, or site notification. I tend to be on StockCharts quite a bit, so I just checked off site notification, and you'll get a little banner that comes across the top of your screen that'll tell you when Apple crosses, or tell me when Apple crosses below 170. Very easy to set up these alerts. And so that's one. The other one I have is Netflix when it crosses below 974. Now, if I pull up the two charts, let me pull up Apple. So I was looking at 170. Back earlier in April, you can see we got down to 169 and change. So that would just be an alert to me that, hey, Apple could be putting in a double bottom. This way I don't have to watch it every day and go back and look and check on what Apple's doing. StockCharts is going to tell me when we cross below 170. The other thing on Netflix, what I was doing is that the stock had gapped up from 973.03, got as high as 1019. So earlier I set up an alert to let me know if it gets back to 974, which is back very close to gap support. And this one, you can see intraday got right back down to this low at 973.05. And this one triggered for me a little while ago. And so that's just an easier way, in my opinion, to set it up so that you don't miss it. Because if you're like me, you probably have 100 things going through your head when you're trading, a lot of different stocks. You get off of one theme and then you're on to something else. And then you just forget about, the fact that you liked Netflix or Apple at a certain level. And the one way to guard against forgetting is by setting up these price alerts, which are really cool, really valuable. So anyhow, those were just some of the things I wanted to mention to you very briefly today in this special presentation, just to give you an idea of, making sure that you don't have to jump in and say, hey, this is the bottom. You don't have to agree with me. I think we're in a bottoming phase. But when we do start to make a turn back to the upside, whether it's the current level whether it's 3 months, 6 months, 5 years down the road, whatever it is, you want to be prepared. You want to have a plan in place. You want to have trading strategies ready. And as a short-term swing trader type, these are the kinds of things that are really important to me to make sure that I don't miss out on what could be some great opportunities. So I'm going to leave you with that. I hope you enjoyed this presentation, and I'll be back with our regular weekly market recaps next week. Have a great week, everybody. Happy trading.